First of all, is the gross margin results and the EPS guide, right? You're not getting the EPS bump relative to the revenue growth. So what it tells me is that the DRAM price spikes or the component issues are also continuing to hit Cisco. Which may be a drag on gross margin, and you're not getting as big of a bump on earnings.
So it's not that
more, right? Those components or whatever.
Say again?
Those components cost more.
Yeah, DRAM, contract pricing has been up around 200%.
Yeah.
NAND storage up 100% over the last quarter or so. So it's just been a headwind for not only Cisco but also a lot of the hardware guys.
But not Apple. Apple was able to navigate this. Why can Apple navigate this?
This was the past quarter, and it remains to be seen what happens in the big.
So you say stay
18.
tuned, even for a company as big as Apple that does orders. Like Apple does orders.
Exactly.
Okay, interesting.
So remind us too, I always love this only just to kind of set the record straight, in terms of Cisco and what they do in AI.
You want to see the whiteboard.
Well, is this is exactly.
Yeah.
But I mean, this is folks who want on-premise systems, correct?
Well,
not only.
Well, they do both on-premise networking systems, whether it's in the corporate or on the data center.
Yeah.
But they also sell equipment to the telecom, right? If you think about some of these routing equipment, these big, large network equipment, it uses a lot of memory, a lot of DRAM memory to carry a lot of traffic. So because of that, they did actually set in a lot of some price hikes last quarter. They're not keeping up with these price hikes, and it may take a couple of quarters for them to pass through some of the increases on the component costs to get the gross margins back online.
What's the growth area of all of that for them?
Well, the growth area, and you mentioned it on the read-through, AI. Right, AI sales last year was $1 billion. They were on track for $3 billion, and quite frankly, I think they're going to raise those numbers. If there was any upside to the numbers on the top line, it was probably going to be AI.
This is a company that has been around for, like, if we talk about this in the context of technological generations, like generations, they've seen it all. And a public company through the 90s and through the tech boom and the bust, the rise of social media, the rise of mobile, and now the rise of AI. The pivots that they've made throughout their history, like where are they right now in terms of this revolution?
So in terms of AI, quite frankly, I think they're number 3 behind NVIDIA and as well as Broadcom.
That's a pretty good place to be.
Well,
or is it?
Unless it's a 2-horse race.
Okay.
Right. So, Cisco announced an update to one of their chips yesterday to get into the cloud as well as enterprise AI. Enterprise AI is going to take a few years to develop, but on the cloud AI, the race has already been won by NVIDIA and Broadcom. Right. They'll still have presence there. But it remains to be seen if they can have a deep presence there. But they are selling other things. For example, optical components, right? And we've been talking about optical a lot as it relates to the AI play. They're a number 1 player on the optical side, and I expect them to be a top 2 player there.
I mean, this is a stock that recently hit a record high, right?
Yeah.
It's taken, though, a long time for it to come back.
Yes.
What's the significance of that? And is it fundamentally based in your view?
So it is fundamentally based. From a PE standpoint, we are starting to see that earnings growth that people are looking for. And quite frankly, relative to other AI exposed names, they're not heavily tilted to AI, roughly about 6-7% of top line revenue. And it's growing. How I framed it as my preview, AI was a cherry on top to a refresh cycle. Right. So fundamentally, margin profile, even though it's slipped a little bit this quarter and possibly for the year, very good, strong cash generation, roughly about $15 billion a year, nice dividend, and good share buybacks. I mean, any GARPy investor would be pleased with that.
Yeah, it's got, I don't know, what, 30 billion in cash? Or no, forgive me, that's debt. About 15, 16 billion.
15, 16 billion in cash, and then the free cash flow, roughly around $20 billion per year that they'll give back to shareholders.
Not too shabby, right?
Yeah.
So I want to get back to this idea of being third to NVIDIA and Broadcom, and this, at least that, being part of a good news if it's not a 2-horse race.
Right.
Can Cisco carve out a niche for itself?
Oh, absolutely. If we think about where they stand in the enterprise data centers,
okay,
they are the 800-pound gorilla.
Great.
If anything, NVIDIA is partnering with Cisco to get into the enterprise. So some of these sovereign AI plays, such as Humane or G42. They're leaning in on Cisco.
So explain what those are.
So Middle Eastern
Yeah.
AI cloud. They're building their own AI systems and data centers for their own, right? To compete with someone like a CoreWeave, or to compete with someone like a Nebius, or work in conjunction with Nebius for their own country's AI systems. They're not going to go to a Broadcom or an NVIDIA because building those systems are too complex. What they're going to do is work with somebody or a company that has all of the technologies into one package so they can have one throat to choke, which is essentially Cisco.
So is this a case of we need a system, but not as complicated as you might provide us, NVIDIA?
Well,
or help me understand what that means.
So we need a system that could help us build it together.
Yeah.
Run the networks, right, with the expertise, as well as the maintenance and the support that some of these white box systems that either Foxconn or someone like that provide to the cloud. They need a lot of support to help run those systems.
But you talked about NVIDIA is it more interested in the enterprise space? Does then Cisco need to be worried a little bit?
Necessarily.
No,
not necessarily, because it's really tough to knock off the 800-pound gorilla here, right?
Yeah.
In terms of Cisco. And if anything, Cisco is already a trusted networking partner inside the enterprise. And, I sat through 3 hours of their keynote speeches at the users conference yesterday, and it was all leaning into the enterprise AI and other products that they have. They have a very full portfolio.
Stock is down 4.6%, just 20 seconds left. Why is it down? Or what do they need to be asked on the call?
It's going to be gross margins.
Okay.
How do you fix the gross margins, and why isn't EPS up higher based on the revenue growth?
And that certainly plays into profitability, right?
Exactly.